Hello folks, the markets are looking increasingly shaky and we are not even halfway through the week. In this video I'll go over what's next on the macro front, which will determine the overall market direction this week, and what that means for SoundHound, because it's basically just getting slapped around by market volatility right now. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post SoundHound videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. So on Tuesday, we had an economic release that the market did not like. US quarterly wage growth. The actual data is called the US Employment Cost Index, released by the Bureau of Labor Statistics, or BLS. The market was expecting a 1% rise in the March quarter, but we actually got 1.2%, which was a huge surprise to the upside. Of course, this is bad for equities because it means wage inflation is now accelerating again to the upside, as you can see on this chart. This has brought back the whole higher for longer narrative in terms of interest rates, and guess what? Treasury yields like the 10-year rose on the back of this data. Remember, a rising 10-year treasury yield is bad for equities because it raises the cost of capital. So I think that's one of the reasons why the market sold off, because the market was pricing in less rate cuts from the Fed going forward. Also, this morning, which is Wednesday, we're going to get the ADP employment number, which gives non-farm payrolls or jobs gained in the private sector. This is different to the non-farm payrolls number released by the BLS on Friday, which includes both private and public sector jobs. So anyway, for the ADP number, the market is expecting a payroll gain of 175k, but as you can see last month, it surprised sharply to the upside, which was bearish. Remember, we want payrolls to either moderate or decline relative to expectations so that rate cuts can be pulled forward. If payrolls continue to surprise to the upside, it means the economy is getting hotter than expected, which will push back rate cuts, and that's bad for equities. So if we get the ADP payroll number higher than 175k on Wednesday morning, I expect the market to sell off further. However, if it comes in at or below 175k, we might see some sort of a relief rally to make up some of the losses from yesterday. If the market rallies, I think it might continue until the afternoon when we get the Fed rate decision and Jay Powell's statement after. Speaking of Jay Powell, everyone reckons he'll drop the hammer and come out with a very hawkish tone in his speech, but I actually think he's going to be neither dovish or hawkish in his statement. This is because he's well aware of how weak the markets look and how much the Fed is cornered between a rock and a hard place right now. If he's hawkish, the markets will crash because it'll now begin to price in a rate hike instead of rate cuts this year. And if he's dovish, the markets will rally, but there's a chance that inflation will reignite, which is something the Fed really does not want. So if Jay Powell can't talk about rate hikes or rate cuts, what is he going to do? In my opinion, I think he'll take a middle of the road approach where he sort of just repeats the same thing that he's been saying all year, which is that inflation is still too high. We are being restrictive in our monetary policy. We're going to wait for more data before doing anything, etc, etc. So in effect, he's just going to kick the can down the road. Furthermore, there'll be no dot plot update in this meeting, so we can't really see how the Fed's committee thinks about the Fed fund rate trajectory going forward. Now, if you don't know what the dot plot is, basically every dot here represents a Fed official's viewpoint as to where they think the Fed funds rate will be at the end of each year. So if some of these dots begin to move up, that's bearish for equities because it means the Fed officials are predicting that rates will increase in the future. But the next update for this dot plot will not be until next month in June, so we don't have to worry about that this week. And that's a bit of a relief for the stock market. In summary, I think the markets might actually bounce tomorrow and Thursday as long as Jay Powell doesn't drop a bombshell in the afternoon. And then on Thursday after hours, we'll get Apple earnings, but I'll talk about that tomorrow. However, if we get a bad ADP number and Jay Powell is hawkish in his speech, then I think the market could tank further. From a technical perspective, just looking at the Nasdaq here, it looks like it wants to go down further. Look at all the red volume here, which indicates that there is strong selling pressure. The current price action reminds me of last July when we had that correction that lasted for about 4 months. If the Nasdaq continues to decline this week, I expect it'll ultimately reach the 200-day EMA pretty soon. That will confirm a correction of around 10%, and at that point, I'll probably close out most of my Nasdaq shorts and buy some beaten up stocks because I'm bullish in the medium term. Speaking of beaten up stocks, let's look at SoundHound. It went down more than 8% yesterday, but on a positive note, at least it was on low volume. It also needs to be said that it's still above the 100-day EMA. I'm not sure how it's going to finish this week because it depends mostly on the overall market direction, which in turn is driven by all the macro data that will be released this week. If the markets crash for the remainder of the week, there is a chance that SoundHound finishes around the mid threes. Whatever happens, SoundHound must hold the critical level of the 200-day EMA, which is the blue line. If it breaches this line, $2 will be in play. As for my position, I'm still holding and not selling anytime soon. There's not much in the way of news, but because earnings is due next week, nothing will probably be released until then. Anyway, that's it for today, folks. It's going to be a highly volatile end to the week, so stay calm and keep cool amidst all the carnage out there. Thanks for watching, and don't forget to like and subscribe for more updates.